Hi guys, today we will introduce our company. Iceland company was founded in 2018 by a group of students from the International University of Batam. This business is formed in line with the courses studied by them. Leadership and entrepreneurship development programs applied by economic students provide opportunities for students to create business and become entrepreneurs. To create their business, not only have to think about the products that will be offered and traded, but the strategies and the necessary costs will be the key point or the key for the establishment of business. So, with the idea that they create a product that lifts the Indonesian culinary in the form of sweet drinks and a delicious taste sensation and also innovative. They have over two kinds of product. That is Blue Ocean Escopio and Sunrise Escopio. And next, this is the company vision and mission.
Audio Jungle.
Next is Iceland company structure organization consists of CEO and another 6 departments. There are purchasing, production, packaging, marketing, financial, and human resource. Each department there has a manager, and under a manager there have staffs. For the production department, there are a manager, production staff, and cost control staff. And for financial department too, there has finance and accounting. Chapter 2: Theory General Policy. Strategic cost management. Strategic decision making is choosing among alternative strategies with the goals of selecting a strategy that provides the company with reasonable assurance of long-term growth and survival. The key to achieving this goal is to gain a competitive advantage. Strategic cost management is the use of cost data to develop and identify strategies that will produce a sustainable competitive advantage. Competitive advantage was created by giving something to the customer that are not provided by other competitors. There are 3 general strategies that can provide a competitive advantage, which is cost leadership, product differentiation, and focusing. As Iceland Corporation used the cost leadership to give the same or better to customer at a lower cost that other competitor can't provide. There are 2 types of linkage must be analyzed and understood. Internal linkage are relationship among activities that are performed within a firm portion of the value chain. External linkage are relationship of a firm value chain activities that are performed with its supplier and customer. There are 2 types of external linkage: supplier linkage and customer linkage. There are 3 types of activities must be analyzed and understood. Structural activities are activities that determine the underlying economic structure of the organization. Executional activities are activities that define the process and capabilities of an organization, and those are directly related to the ability of an organization to execute successfully. Operational activities are day-to-day activities performed as a result of the structure and process selected by the organization. Next, value chain analysis is identifying and exploiting internal and external linkage with the objective of strengthening a firm's strategic position. Targeting cost is a useful tool for establishing a cost reduction during the design phase. The target cost is the difference between the sale price needed to capture market share has been determined and desired per unit profit. Activity-based management. Activity-based management is a system-wide, integrated approach that focuses management's attention on activities with the objective of improving customer value and profit achieved by the providing this value. This activity-based management model has 2 dimensions: There are a cost dimension and a process dimension. Activity can be classified as value added or non-value added. Value added activities are those activities necessary to remain in business. Non-value added activities are unnecessary and are not valued by internal or external customer. Performance measurement is designed to assess how well an activity performed and the result achieved. The performance measure is centered on three main dimensions of the efficiency, quality, and time. Next is trend reporting of non-value added cost. There are Kaizen costing is concerned with the reducing the cost of existing product and process. Next is benchmarking. The two types of benchmarking is internal benchmarking against internal operation. Different units that perform the same activities are compared. External benchmarking that involves comparison with others outside the organization. Next is activity flexible budgeting. Activity flexible budgeting is the prediction of what activity cost will be as activity output changes. Next is activity capacity management. It's the number of times an activity can be performed. CVP analysis. CVP analysis examines the interaction of company sales volume, price, cost structure, and profitability of selling. It is a powerful tool in making managerial decisions, including marketing, production, investment, and financing decisions. Operating leverage is the use of fixed costs to extract higher percentage change in profits as sales activity change and a measurement of extent to which the company of the project lead to a combination of fixed and variable costs. Degree of operating leverage equals the total contribution margin divided with profit. Pricing and profitability analysis. Basic concept pricing include market structure and price. There are four types of market structure. Perfect competition is many buyers and sellers, not one of which is large enough to influence the market. Monopoly is barriers to entry are so high that there is only one firm in the market and the product is unique. Monopolistic competition has both characteristics of both monopoly and perfect competition, but it is much closer to the competitive situation. Oligopoly is characteristic by a fewer sellers. Cost and pricing policies. Cost-based pricing is using cost plus markup. Target costing and pricing is determine the cost of product or service based on the price that customers are willing to pay. The legal system and pricing. Predator pricing is the practice of setting prices below cost for the purpose of injuring competitors and eliminating competition. Dumping is predator pricing on the international market. Companies sells below cost in the other countries and domestic industry injured. Price discrimination is charging different prices to different customers for essentials the same product. Measuring profit. There are two types. There are absorption costing or full costing is required for external financial reporting and assigns all manufacturing costs, direct material, direct labor, variable overhead, and a share fixed overhead. Quality and environmental cost management. Quality links activities are those activities performed because poor quality may or not exist. The cost of performing these activities are referred to as cost of quality. Cost of quality are the costs that exist because poor quality may or does exist. Next is inventory management production system. I will introduce you. There are two types: just-in-time production system and just-in-case production system. Just-in-time production system is a production system used to meet customer needs in a timely manner according to the amount desired by customer. The purpose of JIT production system is to avoid overproduction, excess inventory, and wasting in waiting time. Next is just-in-case production system. GIC production system is the opposite of the just-in-time production system. In this system, to reduce the risk of not fulfillment of customer demand, the inventory of goods to be processed cannot be empty. The amount should be less than the safety stock made as a benchmark. Inventory management is important to form a long-term competitive advantage. Inventory level affect the selling price, quality, production engineering, idle capacity, overtime, ability to respond to customer demand, waiting times, and overall profitability. Inventory management is strongly related to the company ability to generate cash now and in the future. Inventory management policy has become a tool to compete. Lean accounting and productivity measurement. Lean manufacturing is concerned with eliminating waste in manufacturing process. Promised benefit included such outcome as reduced lead times, improved quality, improved one-time deliveries, less inventory, less space, less human effort, lower cost, and increased profitability. Lean accounting is a simplified approach to costing that supports lean manufacturing with both financial and non-financial measures. Next is productivity measurement. Productivity is concerned with the producing output efficiently, and it specifically addresses the relationship of output and the input used to produce the output. Next is budgeting for planning and control. Budgeting is critically important to both planning and control. Budgets are quantitative plan for the future, stated in either physically or non-financial terms or both. When used for planning, a budget is a method for translating the goals and strategies of an organization into operational terms, and for control is the process of setting standard, receiving feedback on actual performance, and taking corrective action whenever actual performance deviates significantly from planned performance. Thus, budget can be used to compare actual outcome with planned outcome, and they can steer operation back on course if necessary. There are three types of budget: is master budget, operating budget, and financial budget. Beside the master budget, operational and financial budget, we can make a managerial performance report with flexible budget and static budget to examine the efficiency and effectiveness of a company. Efficiency is achieved when the business process is performed in the best possible way, with little or no waste. Flexible budget provides the assessment of efficiency, because visible budget compare the actual cost for a given level of output with the budget cost for the same level. For effectiveness, we can use the static budget to know the achieve or exceed the goals described, because static budget usually use the expected sales for the year.
Next is Chapter 3, Transaction and Report. I'll tell you about activity and accounting policy of Assigment Company. Here is the report.
Chart of account.
Next, I will tell you about the Assigment Company cost info for 2 periods. First is the unit produced. Second, the direct material. Third, the direct labor. And fourth, the overhead. And after the calculation, we got the cost per item.
10,000 output budget. Sales budget, period of May to June 2018. Production budget, period of May to June 2018. Direct material purchase budget, period of May to June 2018. Number 1. Agar-agar. Total purchase cost is 90 million rupiah. Number 2. Sugar. Total purchase cost is 31,500,000 rupiah. Number 3. Basil seeds. Total purchase cost is 22,500,000 rupiah. Number 4, Ken Longan Mili brand. Total purchase cost is 29,250,000 rupiah. Number 5, Saset Jelly. Total purchase cost is 90 million rupiah. Number 6, syrup bottle per bottle. Total purchase cost is 123,750,000 rupiah. The grand total purchase cost is 387 million rupiah. Direct labor budget, period of May to June 2018. Overhead budget, period of May to June 2018. Cost of goods sold budget, period of May to June 2018. Marketing expense budget, period of May to June 2018. Administrative expense budget, period of May to June 2018. Cash budget, period of May to June 2018. Pro forma income statement, period of May to June 2018.
Assigment company price info for May and June 2018. Total cost period 1 per unit is 9,002 rupiah. Total cost period 2 per unit is 13,438 rupiah.
Taxation period May 2018. Taxation journal period June 2018.
Assigment company ledger period of May until June 2018.
Balance, period of May to June 2018.
Statement of profit or loss, period of May until June 2018.
Statement of retained earnings, period of May until June 2018.
Balance sheet, period of May until June 2018.
This is the calculation of May variance.
June variance.
Iceland Company, Activity-Based Management. Here is report period 1 and period 2 data for actual quantity, standard quantity, actual usage, and standard price. And here is value and non-value report for May and June, 24 non-value added cost, and activity-based performer report for May and June. Also, here is data for activity capacity management for May and June.
Information, order cost, holding cost, demand quantity. So, from information we can calculate EOQ, ordering cost, and holding cost. Total cost is 600 million.
Congress performance report for May and June 2018. Second is environmental cost report for May and June 2018.
Next is overall production measurement of Iceland Company.